Hello all, and today we are discussing on BFSI domain-focused banking business analyst. Let's start. The banking landscape and core systems. Most IT banking projects fail because teams don't understand the core money flow. To master this domain, a business analyst must balance retail banking's high-velocity consumer apps with complex corporate banking architectures. At the center sits the core banking system, a robust relational backend governed by strict database asset properties. Every financial transaction must map to the general ledger, programmatically triggering real-time double-entry balances to ensure seamless end-of-day reconciliation across the ecosystem. Next is payment rails and the lending lifecycle. Moving money between institutions requires specialized payment rails that separate net clearing calculations from final settlement at the central bank. Modern payment networks utilize distributed alias directories for real-time routing, standardized under universal ISO 20022 XML data streams. This same technical precision drives the lending lifecycle, where loan origination systems handle front-end onboarding and API credit checks, while back-end loan management engines execute automated batch scripts to process monthly interest splits. Next is compliance grid and business analyst validation. To protect assets, banks deploy real-time stream processing frameworks like Apache Flink to enforce strict anti-money laundering rules. These streaming data feeds evaluate transaction anomalies against inline business rule engines, deciding whether to clear or block a payload within a sub-second service level agreement. Ultimately, your role as a business analyst is to translate these complex compliance structures into functional requirements documents and verify them through automated user acceptance testing frameworks. 4. The core repository and architectural isolation. Focuses on how the core banking system, CBS, functions as the structural backbone and operational anchor of the entire financial institution. Serving as the bank's absolute single source of truth, this ecosystem securely houses all master customer profiles, critical account configurations, and routine business processing workflows. To manage these highly sensitive operations while concurrently processing massive, complex transactional workloads, the system runs on a highly secure relational database backend. Instead of allowing consumer-facing applications to query this core database directly, the technical architecture cleanly isolates the central engine. It exposes microservices through a secure API gateway or routes data stream traffic via an asynchronous message broker like Apache Kafka. This smart isolation ensures that daily operations, data adjustments, and interest accruals run smoothly without exposing the underlying data repository to external threats or performance bottlenecks. 5. The general ledger and real-time reconciliation. Explains the operational mechanics of the general ledger, GL, submodule and its automated data execution. The GL acts as the bank's primary accounting engine, relying on standard double-entry bookkeeping rules to record every single financial event as a perfectly balanced debit and credit. Beneath the surface, this functional accounting layer relies on highly structured database schema tables that map directly to the bank's global chart of accounts, COA. Because of this tight mapping, every incoming API transaction payload is required to carry precise, pre-validated accounting strings. These strings programmatically trigger real-time, atomic database updates that instantly lock in balancing entries, completely eliminating the risk of data drift or ledger mismatching across separate microservices. Ultimately, this tight coordination enables a flawless end-of-day reconciliation process, ensuring that the bank's primary financial books perfectly balance across every external consumer channel, from automated tellers and branch kiosks to mobile applications. 6. Interbank routing, clearing, and real-time alias resolution. Covers the architectural design of interbank routing pipelines and the mechanics of immediate fund localization. Functionally, this segment details how modern financial ecosystems move money securely between entirely separate institutions, carefully managing both clearing, the net calculation of what banks owe each other, and settlement, which is the final execution of those obligations through accounts at the central bank. Under the hood, this entire operation runs on low latency, stateless microservices that maintain constant, lightweight communication using secure webhooks and event listeners. 7. Transaction frameworks, messaging standards, and cryptographic security. Dives into the processing of varying transaction tracks, data standardization, and the enforcement of deep cryptographic security. A functional design seamlessly accommodates both non-urgent bulk batch processing networks and instant real-time payment streams, utilizing universal messaging frameworks to inject rich metadata into every transaction for seamless tracking, reporting, and automated compliance auditing. Technically, the system ensures absolute data integrity by subjecting the entire transaction payload to strict schema validation using standardized ISO 20022 XML or JSON structures before it can proceed. To protect this rich financial data from external interception or tampering, payloads are funneled directly through specialized hardware-based security modules, HSMs. These modules dynamically enforce end-to-end message encryption, verify digital signature compliance, and mandate robust transport layer security, TLS, effectively turning complex legal and auditing compliance rules into automated, ironclad technical guardrails. 8. Front-end loan origination and state machine orchestration. Focuses on the customer acquisition pipeline and the automated evaluation of credit risk before an asset is booked. Functionally, this initial lifecycle phase leverages a loan origination system, LOS, to seamlessly manage the front-end user journey, securely capturing applicant identity documentation and orchestrating the rigorous checks needed to verify creditworthiness. To handle these complex, multi-step workflows without manual friction, the lending technical stack coordinates the journey using a robust business process model and notation, BPMN, state machine engine, such as Camunda. This core engine strictly enforces the sequential stages of the loan funnel, ensuring no step is bypassed. During customer onboarding, the system triggers synchronous outbound REST API calls to external credit bureau servers, exchanging secure JSON payloads to retrieve comprehensive risk profiles and financial histories in real time, allowing the system to programmatically move the application to the underwriting decision gate. 9. Long-term asset servicing and automated batch execution. Transitions into the ongoing management and financial tracking of approved loan assets over their entire lifespan. Functionally, once an application clears underwriting and funds are disbursed, the workflow hands complete operational control over to the loan management system, LMS, which is tasked with generating precise amortization schedules, tracking principal versus interest splits for incoming payments, triggering monthly equated monthly, EMI, collections, and routing delinquent accounts into specialized collections queues. Behind the scenes, this high-volume ledger maintenance is powered by heavy back-end batch processing engines like Spring Batch. 10. Risk mitigation, identity compliance, and real-time stream ingestion. Centers on the active deployment of risk mitigation strategies and the technical data ingestion layer designed to protect the financial institution from complex financial crime and costly regulatory penalties. Functionally, this module focuses on enforcing ironclad Know Your Customer, KYC, identity verification protocols alongside continuous anti-money laundering, AML, monitoring across all active customer accounts. To back this functional goal technically, the compliance grid relies heavily on a high-throughput, real-time stream processing architecture, utilizing specialized framework environments like Apache Flink or Spark Streaming. This infrastructure continuously intercepts, ingests, and reads live transaction event feeds directly from the bank's messaging pipelines, ensuring that every incoming payment payload is scrutinized the millisecond it is initiated, establishing an automated digital protective barrier around the bank's assets. 11. Behavioral anomaly detection, Analyst escalation, and BA metadata configuration. dives into the exact behavioral evaluation algorithms, the automated routing of high-risk events, and how a business analyst manages this active safety network. Functionally, the system must inspect parsing transactions in mid-flight to intercept high-risk anomalies, such as a sudden velocity spike in transaction frequency or a radical geographical deviation from a customer's standard behavior profile, immediately pushing flagged events to an internal fraud analyst queue for human intervention. Technically, these incoming data streams are cross-referenced against an inline business rules engine like Drools, combined with specialized machine learning scoring models that calculate anomaly probabilities on the fly. A business analyst plays a critical role here by directly defining, adjusting, and tuning these safety thresholds via metadata configuration tables, empowering the system to execute complex fraud scoring and either clear or block an incoming API request within a strict, sub-second service level agreement, SLA. Thanks for watching. Hope you liked this session. Please like, share, subscribe.